Hey guys, here's how this simple and stupid strategy could make you $10,000 in just one day using almost zero size on a Friday 0 DTE type of trade. While everybody chases breakouts, this simple strategy has been sitting there in plain sight. So one thing to remember with options is when you chase them up, you're chasing up that price and that premium. You want to get them when they dip and grind because the options will be cheap. I've been using this strategy for years and it works in every market condition, whether it's bullish or bearish. So let's dig in. So first I look at daily charts, especially charts that are about to rebound or come off some type of base. So one of the things that you can see with Circle here is that after the run to nearly $300, it had spent months grinding down and starting to base. One of the things that you started to see here is these higher lows that are starting to develop. And so when you see this kind of W action, that is like your classic rebounding action. And so what happens is when you come out of that base, you can get these wicked pops. And I typically like to day trade these because I use the options to get swing trading gains, but as a day trade. So big thing is you're looking for bigger movers, then a basing period, some type of W with higher lows to indicate that buyers are stepping in. And now we want to go to the intraday chart to nail it. The key with options, though, you want to make sure that you do not chase any breakouts. So let's get into the entries and the criteria we need to see to capitalize on this. So now that we have identified the chart on a daily level, I want to go to a 5-minute chart to pinpoint my entries. Remember the rule. On Friday 0 DTE days, you don't want to chase. That's going to be the biggest no-no because you're going to get all that decay. It drops down 50 cents, you're down 25, 30%, and you're totally screwed. So what I want to do is I'm waiting this out, right? Let all the chasers come in at the morning and try to fart around. When the EMAs are flat or pointing down, there's nothing you can do. You just want to stay out of it because you've got this kind of grindy, right? Just grindy stuff. And you can see here, like your moving averages are pointing down. You're still under the VWAP. The VWAP is the orange line over there, so you don't have anything that you can do. But what starts to happen is as you start to hold these lows and see how you start to test that VWAP over and over, what you want to do is look for a moving average crossover. So when the 9 EMA starts to curl up and it crosses through the VWAP here, now what that tells you is that there is a shift in trend. Your 9 EMA is your short-term trend, right? Your VWAP is kind of your line in the sand for the day. So when a stock breaks over the VWAP, but that 9 EMA curls up under it, what it's telling you is there's a shift in trend, but more importantly, that is where the speed up happens. And so what you want to be doing is as you break through this, now you can come in and take the contracts because you're over the VWAP, you have the speed up, and now you can go and you pounce on this. And so what I always will do is go to the next strike price. So I'm not gonna like mess around and try to do like 150s, 155s. Like if I'm coming in and it's 147, like I'm buying the 148 calls because it's Friday and you're just looking for that quick hit because if you can nail them, you're going to get a big pop. So what I'm doing here, this is my TradeZilla. So what I'm doing here is these are the options contracts, the 148s. So what you can see here is it's mirroring the stock, right? So you pop down and you start to just round here. But look, this is where things get a little bit interesting. So this white line is the VWAP. When the 9 EMA crosses over the VWAP, now I know that the shift in trend is happening. And so I got these a little bit higher than I wanted to. You know, I was closer to the 224, 230s. I had to add a couple times. I didn't go crazy here. I had 28 contracts, so nothing crazy. 28 contracts at $2 and some change. You're talking about a little bit over $6,000 to $7,000, between $6,000 and $7,000 on the trade. So let's go into the options chart here real quick. Hold on. So you can see here, I had 28 contracts, give or take. It wasn't a huge amount of cost. Like, I'm not going to go in and put $50,000 in this, $20,000. Like, I'm not a crazy person. I'm going for a big percentage move to capitalize on this with lower amounts of capital. Otherwise, I could just buy shares, right? But think about it. If you want to buy shares, you buy 1,000 shares, it's going to cost you 150 grand. I'd rather do the options, especially if it's on Friday. I got minimal risk, right? So when we're looking into this, you've got yourself an entry over here as you start to come across. Now, I could have been a little bit earlier, but hey, potato, tomato. Now what we want to be doing is, you can see here the high was around 560s, right? So when I see the high around 560s, I want to sell off half into that. Now the thing with Circle is that it's got a crazy spread on it, so you can't market order it. So you want to pre-plan out your potential exits and then shoot off into any parabolics. And then once this thing started to break over and had the big speed up, when I see price get too extended from the 9 EMAs, I usually like to sell out of it because they're going to come ripping back. And look, these are zero DTs. Like this thing hit $8, but an hour later, like it was back at 50 cents, right? Or 10 cents. And so you want to sell off into it, even if you leave money on the table, guys. Don't worry about it. Guys, this is a simple strategy. The key is that you want to remember, you want to hit these as they get low, and then they turn. And for me, my stop loss just goes under the VWAP, right? And so there is risk on this. Like I've got basically a 30% stop loss, give or take, on this. But once again, a 30% stop loss, you know, on $6,000, like, okay, you're going to risk $1,500 to $2,000. And normally I'd be probably a little bit tighter on it. But that to me is a great RR. You've got a tight risk, and you may catch a double, you could catch a triple, you could catch a quadruple even sometimes. I've done some days, like when AMD ran the other day, right? Like that was nuts. Like it ran 20 points, like the options were up, you know, 800%, 1,000%. Now, of course, I only took a little piece of it, but that's what the options can do as you get later into the week. So guys, this is a strategy I've been teaching my students since 2008. I've been running the world's longest live trading course, taught over 7,000 students, some of the best traders in the game. Come and check out our program. You will not regret it. I teach everything live myself. I don't put other instructors in there to blow people's time. When you come to Bulls on Wall Street, you come and you work with me. It's real mentorship, a real person you can talk to every day. Guys, smash that like button if you like this video. I'm going to keep making them for you.